Active listings reached levels not seen since pre-pandemic days, just as rates crest over 7%. A mixed bag for buyers as we continue to search for good news for sellers this week. I am Tony Meier with Windermere Real Estate with your Eastside real estate update. For 36 years, I've been an avid study of the real estate market, using information to help our clients make smart, timely, and most importantly, financially profitable real estate decisions using information so they can get ahead of the marketplace. We're going to help you with some of that same information this week. We're going to talk about rates for sale and pending, months of inventory, and median sales price, see how the market's evolving. First up is interest rates. As I mentioned, we're back over 7%, 7.08 to be exact today. Unfortunately, the world does not have much interest in buying our treasuries, and that's causing our interest rates to go up in spite of things like tariff relief. That's a good news, but our interest rates are moving in the wrong direction for both buyers and sellers at this point. Sitting at 7.08, we are up from last year, one of the first times we've been that way in months. Our active listings, as I mentioned in the title of this, we are back at pre-pandemic levels. We are higher than any time previous to 2020, back into 2019 levels. We're up at 1,250 active listings on the east side this week, a 9% increase from last week, and we're up 112% from 2024. So that's good news for buyers, lots of choices. Obviously, sellers need to be competitive in this type of market to stand out. Our pending sales took a drop this week. We're down 7% this week and down 2% from 2024 as we move out of the last real strong week of the spring market. Once we hit Memorial Day weekend, the market traditionally moves into a slower pace summer mode, so we'll see how our pendings hold up going forward after that. That brings our months of inventory to a place we haven't been except for the first 2 weeks of the year. We can always count on the market being very sleepy as we enter out of the holidays, sitting right around 2 months, 2.1 months of inventory the first 2 weeks of this year. We are now back at 1.92 months of inventory, which is a significant change from a year ago, up 117%, and obviously a slowdown from the week before as we grapple with more listings and higher rates. So what's that done for our rolling median price? Well, in fact, it's brought it back up, so it's an interesting thing, but closed sales are a reflection of the market's sentiment 30 days ago. But we are up 1% to $1,650,000 this week. Still remain down 3% from 2024, so definitely not the same market as a year ago. So if you've got questions about how best to navigate this market, I think buyers are going to see this as one of the best opportunities that they've had in many years to take advantage of the marketplace. And for sellers, I think it's still a fabulous market. You have made a ton of money over the years. You're just gonna have to be more sensitive in your pricing today to make sure that you're attractive to the buyers out there and you stand out amongst more competition than you're used to having. So if we can be of service, please reach out to us. If you like the information we present each week, please share this with a friend, hit the thumbs up icon, and subscribe for our future updates. Well, that's it for now, and we'll talk with you next week. Take care.